Our total focus in our newsletter is speculation, not politics. When we have situations where political impacts affect how we speculate, we want to be able to mention that. But I want to make sure that we all know we have no intention of recommending any person or any political party for the purposes of politics. That is not our intention at all. We have for some time been very bullish on the silver and silver mining industries. And there are a number of reasons for that, which we've talked about in terms of the growth in demand and the industrial demand, in the fact that there's been a deficit in silver production from the mines compared to the growth in demand, etc. But I want to talk about a very interesting, to me, advantage of silver, and that is, are there any industries that, if the stock market and the bond market break, can do particularly well, but also can do particularly well if the interest rates and the stock market stay stable as they are now? And in my opinion, the one industry that can far outperform the market, whether the stock market and the bond market go up or down, is silver. Why is that? Well, as we've talked often about the impact of a decline in the stock market and the bond market, which I think is largely related, in my opinion, to what happens to interest rates. For example, if you look at the stock market and the great crash of 1929 did, for the next 4 years, you had the stock market, average stocks were down something like 89%, and guess which stock of all the stocks at that point was the most successful and was actually up several fold? Gold mining company, Homestake. And this, of course, was that when you already had a situation where the dollar was losing value compared to gold, and so the ability, even in these bad overall economic times, for a commodity, if you want to call gold and silver commodities, to go up, that was the time. And I think one of the potentials for what's going on today is just that situation where the reason that the stock market and the bond market go down together is based on interest rates. As I've said before, I think the biggest reason you will have that kind of a scenario in the next few months is that you have this enormous need for new funding from the federal government, from the treasuries. The amount of money that the Treasury in auctions, which happens several times, but the amount of money that the Treasury has to attract from buyers of their Treasury bonds or bills or whatever is over $100 billion per week. Enormous. And there's a good chance that in order to get that money, they have to move up interest rates dramatically. That would cause, in my opinion, make it very difficult for the stock market to stay high, clearly because higher interest rates mean stocks are less attractive because you can get a higher amount of money in interest on the various bonds. Well, but once again, in that situation, silver would do spectacularly, and one of the reasons is that if the stock market goes down and the bond market goes down, investors have a whole lot of additional cash from doing that selling, and silver has been in the last year the most profitable industry in the terms of the stock market that we have, and it's very common, human nature being what it is, for a lot of those investors to say, gee, let's buy the silver stocks so you could get a very good return from silver in that scenario. Look at what happens if that doesn't happen. Look what happens if interest rates stay low, if some of the policies of the Trump administration are able to keep the growth For example, the third quarter growth for the economy was over 4%, a strong number, and people in the Trump administration are saying we should have an economic growth of at least 5% for this year. Well, in that situation, again, silver looks very, very attractive because you have a situation where, once again, I think the biggest factor in that situation could well be that this was as of 45 years ago. We're talking about gold and silver. The percent of the American investors that were in those two industries was something like 5%. One of the reasons was that gold and silver prices had gone up dramatically during the 1970s, and therefore there was a lot of interest in that industry, and one of the reasons they stocks were that high. But we had, in large part because of the great Federal Reserve Chairman Volcker, he came in to take care of what was the biggest financial issue of very high inflation, and he did that by cutting the growth in the money supply, which was one of the reasons, kind of as John Maynard Keynes told us, that we had strong economic growth because you had all this new money being printed and invested and so on and so forth. So that, as that went the other way, you had a decline not only in silver and gold prices, but also, more important for this little essay, you had a decline in the percent of American investment that went into those industries. And as we know, in the last 20 years, you've had this enormous increase in investment, moving the stock market up to very high levels, in large part in the tech industry or the internet and so on and so forth. And so today, the percent of investments by Americans in gold and silver is less than 1%, even though those industries have been strong in terms of the stock market in the last years. So I think one reason why, even if you have a continued strong stock market and a continued reasonably strong bond market, you could still get a very strong move higher in silver mining, and you have it still a situation where the ability of the silver mines to reduce the deficit that they currently have, where the demand for silver, such as in industrial uses, has been growing more quickly than the mine production. And we have had for several years, and will have for probably several more years, a deficit that causes a severe shortage in silver, as we're seeing as we speak in silver futures, and the recent crisis in the prices of silver. Those will continue to help, and perhaps more than anything else, moving to the foreign policy a little bit, the use of silver and the interest in both silver and gold by the rest of the world, particularly countries like the BRICS countries, China, Russia, etc., has caused enormous buying in gold by the central banks and enormous buying in silver by the industrial users. So my summary is that, unlike almost every other industry I know, I am comfortable in holding silver mining stocks regardless of which way the stock markets and the bond markets go. Therefore, if you put it all together, we think that having strong investments in the silver mining industry makes sense regardless of what other portions of finance, whether stock market or bond market, are going up or down. Some of you have seen the chart of the performance that we have had, and there are two things I'll say about that. One is the performance is very good, but the other is very volatile. And therefore, that's another reason why, please do your own due diligence and be very careful on making sure you do that.